Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. I hope you had a wonderful day. What's going on, everybody, man? If this is your first time tuning, wait a minute. Oh, y'all look good out there today, man. Y'all give it up for yourself, man. Give yourself a round of applause. Y'all look so fine, if I do say so myself. Man, it's amazing to have such a great looking crowd here just to hear me run my mouth. Little old me. Y'all came to listen to little old me. Speaking of little old me, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo español. And you are in tune to another episode of BNQ Intraday Price Action Recap. Hear me. How y'all doing, man? I'm feeling pretty good today, man. I'm feeling pretty good. I slept like a newborn baby last night. And hey, what's going on? Where's my, oh, hold on. I see it right there. Where did it disappear to? Why did it disappear a few seconds ago? Sorry about it, y'all. Squirrel. Something had disappeared and I'm trying to figure out where it had went. So, this is the behavior we get when you are not just waking up. Shout out Hitler this year, man. Shout out Hitler this year. I ain't gonna mess with Hitler this year today. Shout out Royce. What's going on, Royce? He'll learn to share. Shatter. What's up? Shatter been pulling up real tough lately. Shatter been hanging out with us on the real. Shout out Deborah. Oh Lord. I see RN Deborah sneaking at the nurse's station trying to listen to what we talk about. Somebody ain't gonna get they round of They ain't gonna get their dinner or they ain't gonna get something.
No, I am out of town. I'm not at work.
They ain't gonna get their dinner. If you out of town, you need to be over there paying attention to Sherwin. We're rubbing on Sherwin bunions or something. You need to be getting a foot massage. I got you, baby. I got you, baby. Kick your feet up here. What's up, Steve? I see Yolanda in here. Hey, man. I see more numbers than I see names, but them are all the names that I see, so them all the names I'm going to say. Let me ask y'all a question, man. Did Price do anything today that caught you off guard? You know what I'm saying? You was expecting Price to do this, and it did that. What's up, Tyreek? You expect Price to do this, and it did that, right? If it did, drop it in the chat. Let me know, right? I looked out for the family yesterday, and I couldn't access the link myself this morning. How in the world you couldn't access the link? The link was in the Discord. I didn't put the link in the Discord. I didn't put the link in the Discord this morning. I done deleted everything out of there now. So I didn't put, you should have said, hey, Tim, you ain't put the link in the Discord.
Yeah, it was in there. We weren't in Discord. We was on Zoom this morning, so it was in there.
No, I'm saying like the YouTube. She was saying, cause she like to watch it on YouTube. She like, so I don't, I guess I didn't put the YouTube link in there. Y'all got to remind me. It'd be too many things for me to remember. He'll learn she like to watch it on YouTube. She bougie. She bougie. She like to watch it on YouTube. She don't like to watch it on Zoom. Zoom is beneath her. She like Zoom is beneath her. She like to watch it on YouTube. Not for YouTube. What you mean not for YouTube? What are you talking about? It was on YouTube. It actually was on YouTube. If anybody that's not in the gang, did anybody get a chance to watch the pre-market analysis / impromptu tape reading session this morning? Anybody in here that was here last night and got the link? Copied it. You didn't copy the link last night? Why you copy the link last night? Is there anybody in here that copied the link last night and then got a chance to watch it on the tube? If it is, put a one in the chat for me. Yeah, here to learn shit. Why you just copy the link last night? I put it up there. I was like, hey, you got 30 seconds to copy the link. Why you just copy it last night? I guess nobody was here. Kim, matter of fact, because Kim sent, let me see. This how I know it was working. Let me show you. Right here. Let me share my screen. Right? Again, man, I'd like to thank y'all for hanging out with me during the intraday price action recap. Yeah, man. Right? If I go right here to the main chat, Kim said at 9:46 a.m., I was on YouTube on my phone, couldn't respond to the chat. Right? So I know it was up on YouTube. So somebody got the link. Kim probably copied it from yesterday, cause I can't remember if I put it in here. I ain't gonna hold you. I can't remember if I put it, but I be clearing stuff out, right? So I can't remember. I don't think I put it in there, cause I don't remember seeing the little thumbnail. I don't think I put it in there, but Kim did click. I remember seeing it said it was like 5 or 6 people on there. I was saying the link wasn't in a Discord for YouTube. I clicked the link yesterday to access it, thinking it would be in my history this morning. Oh no, it's got to actually play for it to be in your history. You got to copy it. You know, if you don't copy it, like if you don't actually play it, it ain't gonna be in your history. So since it wasn't a live stream, then it ain't Shout out to Rhonda Green for sending the little gif of the little dot and be like, I like that little dot. He be like, she put that up there on my son's birthday. I like that. All right, man. We're gonna go ahead and get into it. I don't see nothing in the chat. I don't see ain't nobody saying nothing. So I'm assuming Price did everything, did exactly what everybody expected, and we don't need to be here, man. We don't need to be. Did something fly in my mouth? I just got this crazy taste in my mouth. Did something fly in my mouth? Did I just eat a gnat? I don't know. Just got this weird protein, I guess. Hey, I was in the military, out in the field. I done ate worse. Out in the field. In the Dust Bowl, in the Mojave Desert. I done ate worse. All right, man. Let's go ahead and get into it. Let's get it started. Let's get it started in here. Let me turn this off real quick. Right? And the reason why I turned that off, because I wanted to ask y'all a question. Right? If you were watching price today, this is the daily chart, right? It's not going to look as clear on the daily chart because all you can see is this big daily candle right here, right? But if you've been tapped in with the gang for a while, right? Meaning over the last week or so, we've been talking about this amazing run up that we've been taking, right? We talked about pang out to the upside. Right, we talked about the original silver bullet, low resistance liquidity run into all-time new highs, right? And we've been discussing how to figure out anticipatory reactionary points once you get to all-time new highs and you ain't got no price action to look to the left and see, right? Because, you know, everybody talk about looking to the left. That's right. You want to look to the left in price action, right? But you ain't got nothing to look to the left too. So you'd be like, how do I determine when is a good time to interact with price? What's a good price target? Do I just guess? Do I just let it go and hope and pray? Do I just say, oh, I don't know what to do. I don't know what to do. No, you don't. The algorithm has left clues behind, so that we can say, okay, these are reasonable targets I can shoot for and targets that I can use to enter trades, exit trades, manage trades. I can do all of this, even if there's no price action over there for me to look towards. Tim, what are you talking about? If you go back through the videos, you'll see that we've been talking about using the magical Fibonacci tool. Speaking of the magical Fibonacci tool, trading secrets that feel illegal to know. You hear me? We could get that magical Fibonacci tool, and when price does something very specific, right? Like trading into a low or high in an anticipatory reactionary point, we could take that magical Fibonacci tool and we can use it to project where price can be expected to go to with a great degree of accuracy. I'm gonna get it together in a minute. I speak extemporaneously. I'm gonna get it together, right? So we already talked about what we did. I ain't gonna visit that right now, right? But then if you look here, you'll say, well, Tim, it is just so, I mean, we see that it went to this little line there, but who cares, right? We care. We want to be able to make intraday, long-term. We want to be able to make trading decisions at all time frames based off of what the algorithm has shown us. And like we said, now that we see our projections based off what the algorithm has done in the past, right? We talked about these deviation lines being what I just saw some pop up. We love the magical tool and the dealing ranges, 4th and 8th quadrant levels, etc. Thank you. You're welcome. Y'all give it up for gratitude. Gratitude said, hey, the magical Fibonacci been coming through. I love it. The magical Fibonacci been coming through, right? So we said, look at these quadrant levels, right, as anticipatory reactionary points, as PD arrays, as liquidity levels, right? Anything you want to name it, right? Because this is a level that the algorithm should realistically be able to reach if it wants to a high degree of a specific number. It ain't just, oh, we're going to this range, and once we get to this range, we should know specific numbers that the algorithm should draw towards, right? And since we got these specific numbers, we can also take that magical Fibonacci tool, right? And we can, let me show you, right? We can take that magical Fibonacci tool, right? And we're going to put it into eighths. We're going to put it in the 8th grade, right? And we can come from one anticipatory reactionary point, if I can get it on the right number, close enough for government work, and stretch it down to another anticipatory reactionary point, right? And then that gives us another range that we can, another dealing range. That can give us another dealing range, because if we look at the halfway point in between two PD arrays, that is event horizon, right? And so if the algorithm understands that there is a crucial PD array resting right there, that means that from that point to that point, we can utilize that as a algorithmic dealing range that we can make our trading decisions in based off of very specific price points, not ranges. We can do it based off of, now let me get the real numbers for you, right? I'm going to delete that one, and I'm going to put in the one that we've been talking about. Right now, I only have the lower octant and the lower quadrant showing, right? Now, if I come in here and I turn on all of my octants and I make the numbers bigger so you all can see them, now we know that 26,000, man, that looks crazy. Can y'all see that? Can y'all see them numbers? Hopefully y'all can see them numbers. Yeah, y'all can see the numbers. All right. Now we know that 27,600 is a very important number to the algorithm based off of what it did in the past, right? And that's beyond that one. The one standard deviation was 27,459 and a half, right? So the next important number is 27,600 even. After that, 27,740 and a half. After that, 27,881 and a quarter. After that, event horizon at 28,021 and 3/4. And y'all see the numbers, right? Tim, why are you saying all of that? Because when we were down here doing, once we reached on Friday the 24th, when we reached that one standard deviation and we started do right here, what do we say? When we project up in between these anticipatory reactionary points, that magical Fibonacci tool will give us very specific numbers to make trading decisions off of, right? And if we look here, just on the daily time frame, right, we can see just off the daily time frame, we can see that price came up, right, went a little above that number and came down on a closing basis of the whole day and closed right there pretty much at that 27,600. The actual close on that candle is 27,598 and a half. right? So 1.5 points away from that on the close. And it went 22.75 points above it at the highest peak, the wick doing the damage. Okay, now give you a sneak peek of what it looks like on the intraday time frame before we go down. I just want to show that on the higher time frame to show that this stuff really works. And just for a sneak peek, because you said, oh, Tim, it just went up there. Who cares? I'm going to give you a sneak peek of what it looks like once it got up there, right? We do like go to a 60-minute time frame, right? Stretch this out right here. Oh my goodness, look what it did. Break, 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 break.
Let him cook. I said let him cook.
Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. I'm asleep. I'm asleep. But there's no algorithm. Let me hide these other octets again. Right? We already see. I'll leave the numbers big for right now. Somebody remind me to make them smaller when we get ready to drop down into our intraday time frame. I don't really need the projection for the intraday. Don't need this low right here. All right. Do anybody got any questions about what's going on the daily time frame before I drop down? Just like we said yesterday, there's not a lot to talk about on the daily time frame right now because we've made all-time new highs, right? And we're just up here engineering liquidity up here at this bullish breaker, right? We're up here at this bullish breaker at the, you know what I'm saying, trading above this area here, and we're just engineering liquidity, which is normal whenever we, you know what I'm saying, expand in the range. You know, a lot of times the algorithm IPTA just go into a holding pattern where it's engineering liquidity, right? And you don't want to be the liquidity on that time frame. You want to wait for price to tip its hand on whatever time frame that is where we just engineer liquidity. And then you just want to drop down in time to, you know, make short-term trades that's below that time frame. So if we're just engineering liquidity on a daily time frame, then you want to drop down to intraday and look for your trading opportunities intraday while we're here engineering liquidity on the daily. All right. Everybody got it? Get it? Got it? Good. Again, any questions before we drop down? No questions? Nobody got anything? All right. Let's go ahead and drop down to our 60-minute time frame. Right, we'll drop down to our 60-minute time frame, and today this is where we opened up here today, right? This huge green candle right there, that 6 o'clock candle, 6 o'clock p.m. candle there. That's when we opened up today, right? This is our new day opening gap right there. All right. So looking at that new day opening gap, you can see that we were in a discount, right? We were in a discount of our sale program, right? We pointed out the fact that when we came down here, we traded below that low, and that could be the completion of this market maker sell model, right? Because we had come back to a discount of our overall bullish dealer range, because overall price is bullish. We're in a buy program. Right? We pointed out the fact that we had come back to a Jesus Christ. I keep forgetting to pick my my template. We pointed out the fact that we had come back to a discount of our overall, our latest expansion of our bullish dealing range, right? We pointed out the fact that this drop down here had taken care of all of the untouched sell side liquidity, right? Because we took all the sell side liquidity there, took all the sell side liquidity here, took all the sell side liquidity here. Then when we expanded up, right, We never came back down to a discount. Then we came back to a discount, clearing up all the sell side liquidity here. So we said be mindful. Now that we have done that, right? Price had started obeying bullish order flow, and that could be the end of this market maker sell model, and we could very well come back up. And I said the invalidation of this market maker sell model, this bearish order flow, would be to make all-time new highs. Okay, and we have today, we made all-time new highs right there. We made it last night on this 7 o'clock count, I think it was. Do I have that line up here? Do I have that line on the day? Yep, right there. All-time new highs right there on that 7 p.m. countdown. Made all-time new highs. Okay. Now that we've made all-time new highs, right, we have extended our buy program, our overall buy program from way back here, right? We've extended it again, right? So now the high, right, is over here at that point right there. That's the high now, right, of this portion of that buy program. Okay, that's the high, and we're just up here engineering liquidity up here at the top. You see here, we're just in this range. So ever since we came up here, ever since we came above this high right there, right, making new all-time highs, we've just been consolidating over here in this range, right? Engineering liquidity. You don't want to become the liquidity, right? You want to wait for the algorithm to tip its hand of what it wants to do. Oh, and look at here. After hours, we've extended the high again, right? We've extended the high again, so that's the new high right there of the range. All right, so we're continuously extending the high. Keep extending the high, okay? Now, again, I pointed this out before. You know, you have people, I'm just going to talk about me. As we're extending the dealing range, right, I don't look at this as a break-in structure, right? I look at it as we're just extending, right? We're just, I look at a break-in structure as when I'm going from bullish to bearish, right? Coming back below here. I look at that as a break-in structure because we're breaking structure. It's like we're going from bullish to bearish or bearish to bullish, right? There's nothing wrong if you want to say, oh, we got a break-in market structure trading outside of there. I just say things that make it make sense in my mind. I'm just looking at this as a continuation, right? We're continuing. You don't have to do the same thing I'm saying. I'm not saying you wrong if you call this a bullish break-in market structure, because yes, you're breaking outside of that structure. But for me, I just look at it as an expansion of the range, a continuation. I don't look at it as a break-in market structure, okay? So if you hear me saying something is not a break-in market structure and it looks like a break-in market structure to you, whatever makes it make sense in your mind. Okay, now that we've beat that horse to death, all right? So now, as we see, we came up, right? Uh-oh. Get out of there. As we see, okay, we came up last night and we just rallied straight up and went into that 27,600, right? Traded up into it, poked above it, right? Came back, closed below that 27,600. Tim, where did that come from? We know that's the lower octant of the range of the event horizon between that 1 standard deviation and the 1.5 standard deviation of our projection based off of what the algorithm did way back over here, right? What algorithm did way back over here, right? Because of this over here, right? We know that 27,600 is a very important number. Just like that 27,000, just like that, all the numbers we said up there, right? These are important numbers if IPTA chooses to trade up to them, right? And if we trade up to them, what are we looking for? We're looking for, if we're below it, we're looking for premium sensitivity, right? Tim, what does premium sensitivity looks like? Let me draw these wicks so you can see the wicks of the candles that's going through, right? All the candles that's trading through. This is 4 o'clock. I'm going to take off the candles that's already started for the new day. I just want to look at the stuff that was from the trading day. All right. Putting these little wicks on there. Putting these little wicks on there. So y'all can see these wicks. So y'all can see these wicks. Now, can y'all see all them wicks? Are the wicks clear on YouTube? Can y'all see the wicks? Or Zoom, YouTube Zoom, can y'all see the wicks now? They're not disappearing when I move the chart around. Are the wicks staying there? They're not disappearing? Okay, thank you. All right, thank you. All right, so, all right, what does premium sensitivity look like? Right here. We came up to it, traded up above it, body, close. Let me blow it up big so y'all can see it. I don't want to blow it up too big because I want to be able to keep everything in the screen. And then when I have this, it takes up some of my screen, so I'm gonna have to turn this off, right? Because it's taking up some of my screen when I cut that off. All right. So this is premium sensitivity. Traded above that very important number. Bodies of this hourly candle close below it, right? Showing respect for it. Feel it when I'm exploring past it, so I'm not too weak to even reach there, right? I'm strong enough to push past it to show you that I want to keep exploring past here, but not just yet, right? But not just yet. Bodies are respecting it, right? Showing some premium sensitivity, and then you see the reaction off of it, right? Premium sensitivity, reaction, right? You know, okay, that's doing its job. It's pushing price away from it. All right, nice price put, but it didn't go anywhere ambiguous, right? It didn't go anywhere ambiguous. Remember what we say all the time. We say, let the algorithm, right, establish a range, right? Let the algorithm establish a range, okay? Let the algorithm engage liquidity, and then let the algorithm show you what it wants to do, right? Now, here's our anticipatory reactionary point there, right? We're looking for some kind of reaction there, right? We get a reaction there, we come back down. We don't come somewhere ambiguous, right? We come back down to our new day opening gap, right? This is a bullish new day opening gap, right? This is the low of the day, right? So this is the low of the day. This is the high of the day for the time being, right? Let's map that out so we can see it, right? We're gonna take us a little Fibonacci tool, right? And we're gonna put this into quadrants, and we're gonna go from the low of the day to the high of the day, all right? And then we're gonna make those real fat so they stand out, all right? Make them real fat so they stand out. I'm gonna hide this all-time high, right? Because it ain't got nothing to do with what I'm talking about right now. I'm gonna hide this new week opening gap. It ain't got nothing to do with what I'm talking about right now. I'll leave that fair value gap there. It ain't hurting nobody. It ain't hurting nobody. All right. So this was our low from yesterday. This was our high from yesterday, right? So as we opened this day up right here, right? This was our current dealing range, right? So this is the low of that dealing range. This was the high. When we opened up today, we extended this dealing range, right? So now this is the high, this is the low of the overall dealing range. We're going to draw it like this. Overall dealing range right there, right? That's the high, that's the low of the overall dealing range. All right. So we got a range right here. Okay. What we say, let the algorithm create a range, right? So a range was established, created. Then when we started a new day, this is the range created in that new day. So a new thing has been created, right? Once we got the highest high and lowest low, once we did that, what did price do? Price reacted at a higher time frame, premium anticipatory reactionary point inside of a buy program. So we came up to a premium PD rate inside of a buy program, right? Taking out buy side liquidity in a buy program. Okay. If we're in a buy program, what do we want to see first? We want to see a manipulation of sell side, right? And once we see a manipulation of sell side, then we want to look for opportunities to buy in a discount. Okay. Okay. Right. Then once we got that premium sensitivity at a premium PD array during a buy program, price came all the way back down into our bullish order block. We talked about this month. We said, hey, during a high resistance liquidity run, we talked about that this morning, we anticipate price coming back to the order block, right? So we come back to the order block. Where do we stop at? We stop at the new day opening gap, right? We trade below the sell side liquidity of this new range that the algorithm created, right? And then once we sell below the sell side liquidity, what do we see? Discount sensitivity at this discount PD array during a buy program. We get a manipulation of sell side, right? And then price trades all the way back up into an extreme premium, right, of this bearish dealing range right here, right? Because we made a new high, we made a new low. We took out liquidity, So we come all the way back up to the premium PD array inside this bearish dealing range, right? And once we hit that premium PD array, right, price comes all the way back down and manipulates out internal sell side again. Why is it internal? Because we're still inside our current dealing range, right? We're still, see this low here is inside the dealing range. We come back down, manipulate out sell side liquidity, right? And once we manipulate out that sell side liquidity, price comes all the way back up again, right? And we eventually do what? Take out the opposing side of that liquidity, all within a very high resistance day. But all it did was extend a range, establish a range, manipulate sell side, give an opportunity to buy, right? High resistance, pull back down, manipulate out more sell side after the New York Open, right? Manipulate our sell side after the New York Open, trading below the opening price again after the New York Open, taking out the London low after the New York Open. And once they do all of that right there, we trade back up and take out the opposing side that we created last night.
Let him cook! I said let him cook!
Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. It don't do nothing different. It ain't gonna do nothing different. One of these days, somebody gonna be like, you know, I understand what Tim's saying now. I understand what Michael talks about. I can see it. I can see. Wait a minute. I see some dissertations over here. I still get confused as to which exact swing high to anchor to if one forgot about contract change dates in order to project for the daily level. For example, when you changed it to the other day. Okay. It I ain't gonna say the contract change date don't matter, right? But just go with the entire range. Don't, like, if it's a subordinate swing high on your manipulation leg, go to the entire range, right? That will, you can't go wrong, right? Because let's look at it. Let's go back and look at it, right? Because ignoring the fact about the contract changeover, I just talked about the contract changeover, is because time is the most important thing, right? And based off of the new contract, right? What was it? Based off the new contract, wrong one. Based off the new contract, this was the first swing high that was made after this contract began, right? So if we look at, right, what price is doing right here, okay? If we look at price, and when I say go to the top of that range, all right? So when we look here, we see that price is trading here, right? We're gonna follow it out, right? Come there, we poked above there, right? We poked above there. So now, right, that right there, we're still inside this area here, right? We're still inside this area here, up into here, right? We drop down there, right? And then we come back into the range, all right? Now that we felt below the thing there, right? We come back in the range. But what did we not do, right? What did we not do right here? We didn't show any type of displacement in the essence of creating an imbalance. We ain't show no type of displacement away from that range. All right. So we're still just consolidating inside there. Okay. When we come here, we start to drop down, right? We get below all of these equal bodies, right? Remember, this low right there, yes, that's a low. Let me mark it out so y'all can see it, right? That low right there, yes, that's a low, but all of these relative equal bodies over here, that's where the real magic is happening, right? With that closure and this closure, right? Those two closures, right, are more significant than this wick, right? Because at this time right here, this is your lowest low. Why? And then you're displacing outside of these bodies right here because you create a fair value gap right there. All right, so you got a fair value gap there. You're displacing away. And then right here, this is where the magic happens, okay? Right? Now, everything is, you got to look at the price. Like, everything going to be different. It ain't going to be the same every time, right? So, since you're displacing away and you have this imbalance right here, right? When price, when price comes down, right? Trades up, back up into this imbalance right there, right? You see these two up close candles right here, right? You see them two up close candles right there. When price makes this high and then drops back down and offers this price right here, this is the beefier candle of the two, right? This entire thing is your bearish order block once we offer this price, but because this is the beefier candle of the two, that price right there is your change in the state delivery, right? That price right there is your change in the state delivery. So since this is your change in the state delivery, that swing high right there is the start of your manipulation leg. This is the start of your change in the state delivery. So that's the start of this move, right? Not that, right? That's the start of this move. Now, there's nothing wrong with going from the low back to the first swing high, right? That's the way Michael taught it, from the low back to the first swing high and then project it up. That will give you very accurate projections. But if you want to do it based off of the entire manipulation leg, right? You just do it. This is your entire manipulation leg. So this is your entire manipulation leg, and this is the latest expansion of that range, right? Because this is your high, this is your low that started this manipulation leg, but this little retracement back up there that gave you another expansion leg inside your total dealing range, right? So this right here is just from the latest expansion. This is the entire dealing range. So if you anchor it to the entire dealing range, right, it's going to be accurate. It's going to be accurate. It, as far as like it, and that just depends on how far the algorithm wants to keep going, because you can fractalize everything, right? If you go back to the first swing high, it's going to be accurate. Why? Because the algorithm understands this expansion leg. The algorithm understands the entire dealing range, right? So as you keep going up, right, it's going, put it like this: this smaller range, well, this larger range that you're projecting, as you get farther away, the accuracy is going to be more accurate with the larger range, right? With the smaller range, it's going to start to get less accurate the farther away you get, because the smaller size you use in the beginning, right, the more deviations it starts to project, the farther you get away. So let's just imagine, let's just say, if we had a swing low here and a swing high there, right? When we look at it, we can see that using that smaller dealing range, right? Using that smaller range, right? Once we get up there, once we get up here, we can see that we are 6 standard deviations away, right? And that's a lot of deviations away from the mean, right? You've extended very far away from the mean, right? So when you're using the smaller ranges, they're going to give you more accuracy on the lower time frames. But when you're using the bigger range, right, like on this daily time frame, you're using this entire manipulation leg. You're going to get more accuracy as you move really far away. All right. That's just a long-winded way to say, just, you know what I'm saying, use the entire manipulation leg. And you always want to be anchoring it to a point where the algorithm has shown you something. You don't want to just pick a random swing high and a random swing low. Okay? Just the reason why I said, like here, when we anchored it the first time, right? When we came from this swing high to this swing low, right? Because that right there is the leg that manipulated the sell side. So the algorithm understands this price leg here manipulated the sell side. So that swing high is important, that swing low is important, and it knows based off of this manipulation leg, it can swing this far, right? Because we picked that. Now this one here, it understands this was the start of this entire range. So it knows that this entire manipulation leg can swing such and such far, right? You don't want to just go in there and be like, oh, I'm just going to pick this swing low and this swing high and I'm going to project it up. It should work. No, that ain't how it works. You want to be anchoring it for algorithmic reasons, right? Just like how we anchored our Fibonacci tool in between the 1 standard deviation and the 1.5 standard deviation and got this 27,600, this 27,740. It's anchored at the 1 standard deviation from this manipulation leg and the 1.5 standard deviation to this from this manipulation leg. And so the algorithm knows, because I did this low here inside this Fibonacci tool, it knows that that low and that high, right? It knows that that low is 1 standard deviation of this entire leg, and it knows that that high is 1.5 standard deviations of this entire leg, right? You want to anchor it to something that the algorithm understands based off of what it's done in the past. You don't want to just go and pick any random high and low and think the magical Fibonacci tool is going to do it for you. You got to anchor it because of algorithmic reasons. Y'all give it up for gratitude for pulling up with the hard-hitting answers. I agree with you. My son has been taking a struggle with trading continuations in the premium. Yes. Go help the bell, right? Go help the bell. Continuations in a premium, continuations in a discount in bearish conditions, that's always tricky because mentally we be like, man, it done went so far, it's got to pull back. It done went so far, it's got to pull back, right? And what helps me now, because I still struggle with that right now, what helps me now is I look for invalidation points for the buy programs and the sell program, right? And I look for it on all time frames, okay? For example, right, let's look at today, right? So if we're looking at today, right, this is a 60-minute chart, right? So like we said, we extended our range. Let me hide this. I'll leave that there. That ain't hurting nobody, right? I put this into quadrants, put it in the 4th grade. All right, so when we opened up last night, right, we're inside a bullish dealing range, right? Because we made the low, we made the high there, you know, I think we took out sell side and buy side, right? So this is actually a bearish dealing range, but we're inside, we're respecting bullish order flow, right? Moving back up. We're short term, we're in a buy program right there, right? So this is the lowest low. This was the highest high, right? This right here is the latest expansion leg there, and then we extended it up higher, right? So now we're inside this bullish dealing range right there, right? We got a bullish dealing range. So now, since we got a bullish dealing range, right, we're looking for reasons to buy in a discount, right? Even though, right, we have just taken out made all-time new highs right here, right? We've taken out all-time new highs. So on this hourly time frame right here, right, on this hourly time frame, until we take out this swing low right here, that's just for this case right here, until we take out this swing low right here, this buy program that we're in is not invalidated, right? Taking out this swing high invalidated the sell program that we was in, right? Remember we said here, if we get back above that high, it invalidates this sell program that we was in, right? So now that we've come up and taken out that high, right? This is our highest high. This is our lowest low for this entire bullish dealing range. So on this hourly time frame, until we take out this low, this buy program is still intact, right? So now that we know our range, right, now we can make our trading decisions, okay? This is our overall range, and this is our latest expansion leg, okay? We look for our trading opportunities inside our latest expansion leg, okay? This is our latest expansion leg, which is our current day's range that we're trading in, okay? So if we know this is my invalidation point, right, as I pull back, right, anytime I pull back here, right, and I come back down to a discount and I start seeing bullish order flow, right, I can take longs, right? I can take long anytime I'm in a discount. Anytime I'm in a discount of my range and I see price respect and bullish order flow, I can take longs, right? I can take longs, right? And when I come back into a premium, if I start running up on like this fair value gap right there, that's the first SIBI that was created when we dropped. If I trade back up into this, I have to allow this to do its job, right? Because it's the premium PD array in this range, right? Also, it's the first one. So I got to allow it to do its job. Its job is to push me outside of this range, right? So if I hit it and I start to pull back, right? No harm, no foul. This is my invalidation point, right? So even if I come back and take out all this internal liquidity, it's all good in the hood. Long as I don't invalidate it, when I start seeing bullish order flow, I can trust the longs, right? I can trust the longs long as I'm in a discount of my range, right? And I'm respecting bullish order flow. I can trust the longs. But once I invalidate the bullish order flow, right? This is my structured time frame. This is an hourly time frame based off of a daily. Once I break the structure, trade down here below that low, now I'm like, okay, I don't know if I can trust the longs no more, right? Only way I can trust the longs is if I come back up here, right, to extend the overall range even more, right? Because once I break down, now, oh, I can't. I'm breaking structure. I'm invalidating the bullish sentiment for this time frame, even if it's for a short period of time, right? And if I do break down, I want to go to the higher time frame, just pop up to my higher time frame to see, does the higher time frame have a reason to come down here? And if it does, mark out that anticipatory reactionary point, and when it gets there, look to see if price starts respecting bullish order flow again, right? Until I get all the way down and invalidate the buy program on that higher time frame, okay? And then looking at, this is a 60-minute time frame, but you come down, we're gonna drop down to a 5-minute time frame here, right? And as we see, once we come down here, right, we got to that lower quadrant, traded back up, dropped down, took out the short-term liquidity, traded down into that reclaimed fair value gap right there. That's the first BISI that was created up there. That's an anticipatory reactionary point, right? We see discount sensitivity there, trade up, right? Boop, there's your trading opportunity, right? Because we're respecting that, right? We came up here, right? Well, Tim, how can I trust that? Because you're looking at the signatures, right? Looking at bullish order flow. We come down here, right? We trade back up. That's our change in the state delivery. All these consecutive down close candles right there. That's our change in the state delivery, right? We creating these inversion fair value gaps. Now, this fair value gap right here, this is the first one made with displacement outside of this area right there, right? Yes, we got a small fair value gap there. We got a small fair value gap there, but all of that is inside this area. This is the first one that's displacing outside of that area right there. So that right there would be the fair value gap that you're looking for to become an inversion fair value gap, to be used as an inversion fair value gap, right? Right, so that's your inversion fair value gap right there, right? So we come back up, right? We have a breakaway gap. We got a fair value gap. We got a change in the state delivery. So that's our change in state delivery. That's our inversion fair value gap. We trade back down into the inversion fair value gap, back down inside the fair value gap, and we go. That's how you can trust that right there. You're showing bullish order flow after tapping into our discount PD rate, after coming down into this lower quadrant, after, you know what I'm saying, trading down into the higher time frame anticipatory reactionary point, and started respecting bullish order flow. Right now that we haven't invalidated our buy program, right? And if you notice here, when we came down here, right, when we traded to that spot and started consolidating, we didn't do what we did down here, right? We didn't do what we did down there. Okay, When we came over here, started consolidating, right? When we started consolidating here and we dropped down and took out that even here, even over here, when we moved back up right here, we didn't do the same thing that we did over here, right? We came here, we stopped, right? All of this here is just pretty much inside of a little consolidation, right? We're coming down, right? We dip below there a little bit there, trade back up, right? Come back down into the order block, trade back up, refuse to take out the high. Now we displace away, right? Because here, when we drop down there, no displacement. All we did was drop below the low, right? We traded up, coming here, but then we get that displacement below the low, and then we get that displacement back up, right? Inversion fair value gap, changing the state of delivery, BSI, trade back to the inversion fair value gap, back inside the BSI, and go, right? It's the small nuances that you're looking at to recognize the bullish order flow. And since you have not invalidated your buy program, right, you're back in a discount and prices now starting to show you bullish order flow. So now you can trust taking it long. But Tim, what if it stops me out? It stops you out. That's why we got stop losses in place. But we never go against the order flow until, right, it invalidates it. Or if you're in a premium, let's talk about going to get trading against the grain, right? Right? If you're in a premium, like we are up here, right? We trade up here. We're in a premium. This is the highest high. This is extreme premium above the upper quadrant, right? You want to get back to a discount, okay? So if you want to get back to a discount, right, you say, hey, this is my first BSI that was created on the way up here, right? So now I'm going to look for a reason to short back down to this BSI, because this BSI right here, this BSI here, low resistance, it can come into this one and stop, right? Because it's right at equilibrium, slight discount, right? High resistance, this is your first BSI that was created right down here with your order block, right? This is your order block over here. This is your propulsion block over here, right? So you say this BSI is in line with the propulsion block. So during a high resistance, I can anticipate it coming back down into this order block here, right? It's inside the last down close candle of my order block. So this beefy candle right here, right? This is the entire order block. But since this candle is so much more beefier than that one there, right? You'll be looking at this right here as you're changing the state of delivery. When you offer that price right there. Yes, true. This is your entire order block. But since this is so beefy, right, that'll be your change in the state delivery right there. This candle here dropped down, took out the liquidity. When you offer that there, that should change the state delivery. This is your entire order block, right? So you can be targeting price to possibly come back down to here in a high resistance move. And so you can look for reasons to sell anywhere above this 27,358 and a half, because that's equilibrium of your entire expansion leg that you're looking for trading opportunities inside here, right? So where can you look for trading opportunities, right? That's when your magical Fibonacci tool come into effect, right? You can look for at octants. The octants, you're going to look for reasons to trade around these octants. Now with the octants, you're only going to get two good opportunities before coming down, the upper quadrant and the equilibrium, right? If you put it into quadrants. With quadrants, you're only going to get two opportunities, right? If you put it into octants, right? If you drop it down into octants and go put it into the 8th grade, right? Now you have more, right? You have more bus stops to trade off of, right? You got more bus stops to trade off of, right? Now you got 1, 2, 3, 4 places that you can look for opportunities to trade off of, right? And when you're looking to trade scalping, right, you want to start to drop down in your time frames. So once you get something of significance, right? Let's just say we come up here, then you fail to get up there, and then we start to break down below this upper octant, right? And you be like, hey, price looking heavy, it's dropping, right? Right? We just gonna say right around here when it started dropping. Now you say, okay, I'm looking at a 1 minute time frame and seeing what I can see. Right now I'm looking at a 1 minute time frame because I like what the 60 minute and the 5 minute has been showing me. Now when you come into your 1 minute time frame, now you see here we have, right, and then these are PD arrays that was marked out there. So none of this one exists, right? So this one exists at this drop right here. This one don't exist until, let's mark when this one exists. This one don't exist until this candle closes. So anything to the right of, anything to the left of that line there, this red area here don't exist yet, but this green area does exist. All right, back to the 1 minute time frame. All right, so matter of fact, I'm just gonna hide this red area because anything before this, it don't exist. All right, so we're gonna go in and hide this. All right, okay, and then as we see here, when we come in, this is when price started to drop right there. All right, so here's your bus stop there. Right, we're at our bus stop there on the 1 minute time frame. Right, we're using it. We see discount sensitivity there, but we're not taking the highs. Right, we're failing to we come down. Right, we're not taking the highs. We come down, we're using it as discount sensitivity. Right, swept out this short-term sell side, but we're failing to take the highs. Right, and then we come over here and we break down below it. Right, we break down below it there. Okay, now there's not a lot of retracements in here for you to take trades off of. Right, the only thing in here to take trades off of are bearish order blocks. Right, if you trade bearish order blocks there, right, once we come down here, boop, right, this candle here, oh, we're still inside of it, but this candle here trades back up, this candle here trades back up, right, this candle here opens up inside of it. Right, so trading bearish order blocks, you got an opportunity to trade a bearish order block inside there. Right, you got an opportunity to trade a bearish order block here. Once we trade down off of that price, this candle here trades back up into that bearish order block. Right, you got a chance to sell off of a bearish order block there. There's not a lot of retracement opportunities in that area there, but you do have order block opportunities in that area right there, because when it came here to the there is a chance to sell off of this SIBI right here. Right, that SIBI in conjunction with that bus stop, that candle there does trade back up into that bearish SIBI right there. Right, it does trade up into there. Right, so if you didn't catch that, to trust that, then you got your order block there, your order block there. Right, those are the only real opportunities there on the 1 minute time frame for that area. It ain't really nothing else that you can pretty much do at that time there. Now, once we get this drop down here, okay, we get this drop down here. Now, once you get a drop down there, remember what we said. This right here existed already when this first started dropping. Right, this is a 15-minute PD array. Okay, you see we sliced through all of this over here. So now all of this is a balanced price range. So when price trades back up into this SIBI right there, you can trust selling that SIBI, because you don't want to see price trading back up through this balanced price range right there. So you can trust selling this SIBI right here because it comes in line with this balanced price range. So that's an opportunity to sell after it drops down below this, because this was here already and we cut through that PD array like butter, cut through that like butter. Then we got down here, started engineering liquidity right after we got down there at that breaking market structure right there. So we're consolidating there at that bearish breaker, right? And we trade back up into that fair value gap, and then we eventually come down below equilibrium of that range. And then anything after this, you don't want to be looking for a chance to participate in shorts, because you're shorting from the premium with an anticipation of it coming back down into a discount, right? Because you're trading against the grain, and here is your PDA rate that you're targeting. Once you get there, you just call it. Even if it keeps running to this sell side, you got your discount PDA rate that you're targeting, because you're in a buy program. So when price gets here, you're anticipating it to try to go back up. Even if it goes a little farther than you thought it was going to go, don't be greedy. Stop there, right? Man, I wish I would have been recording that as its own section. Hey, Profit Scalping King, don't be retracting those statements. Say it with your chest. Why you be saying makes perfect sense to me. Oh, what you be saying makes perfect sense to me. Okay, appreciate it. Low key, in these market conditions, I'm only shorting for one. You smart. I'm Scalp McGee. I've been Scalp McGee for what? How long? I've been Scalp McGee gang for about a year. I've been Scalp McGee for a long time. Yes, very risky trying to hold trades a long time. For me, I be hitting 100 pointers some days, but that's when I'm looking at the market for hours. Right? What's going on, No Shoes? Put your shoes on, man. Put your shoes on, No Shoes. What? Hey, here, learn to share. What did Prophet Scalp King say? I'm be retracting those statements. Put it back in there. Say it with your chest. Say it with your chest. I wish I would have been recording that little piece there for a gem from the live stream. That was good. That was good. That boy was cooking.
Let him cook! I said let him cook!
I missed it. I had a commercial. Man, you ain't paying for premium. I be paying for premium, so I don't have commercials no more. I was just asking if you use ICT. Yes, I only trade ICT concepts. No, I ain't got no knock against anything else. Matter of fact, every day I be sitting down looking at D Money. He stream on Patrick Willing channel. I be looking at D Money and hanging out with him and tripping. I think I'm the only ICT trader that's in the chat. Right? I call myself the resident ICT resident BDH resident ICT trader. That's what I call myself in the chat. I be hanging out with D Money. He trade momentum using the 14 and 21 EMA. Some EM he used some EMAs, but he do momentum trading. But I just hang out over there and have fun because he a cool dude. But I only trade ICT concepts. We've been on here for a while, man. Y'all wanna dig all the way down into the weeds and look at the New York session, or y'all good on the day, man? I leave it up to y'all. No, I'm there, but I turn chat off because they are childish. Oh, you be over there too? Your aunt currently shorted MNQ. What you think? Hey. If you see pure motivation, if you saw a reason to short, I ain't mad at you. If you saw a reason to short, I ain't mad at you. Do you pyramid enter trades, or do you just enter one entry and set a stop? It depends. I'll pyramid in if prices saying that it's cool to pyramid, but I don't just look for the pyramid every time. Like during trading days, like what we've been having lately, it's like I enter and I'm just trying to manage that one trade because it'd be so much back and forth, right? And I've been conditioned to like locking in profit because I was trading with Apex for so long. And they have intraday trailing drawdown. So I'm so conditioned to locking in profits that with all this chop, I be locking in my profits and I don't be caring because like I've gotten to a point where I know how much money I need to make for it to be a good day for me, right? And then if I hit that number, I might just get up and walk away, especially if it's difficult, right? If I get over that number, I'm cool, right? If I get under that number, I'm cool. But it's like, if I get a trade that start running, right? If I get a trade that start running and I can lock in enough profit that's going to be like, okay, no matter if it come back and stop me out, this is a good day, right? I'm so used to locking in profits, I just lock them in, right? Because trading with prop firms, most prop firms got a consistency rule. So it's like, I don't want to get out there and have a home run day, because now I got to keep getting home run days to meet the consistency rule. You see what I'm saying? So it's all about, are you trading personal funds? Are you trading prop firms? Are you, you know what I'm saying? Do you trade a lot during the day? Do you try, you know what I'm saying? Do you try to run? Because me, I'm just trying to get to the minimum threshold to take a payout. All right. Soon as I hit that minimum threshold, whatever the max they say I can take, give me my money. If I hit the minimum threshold, they say I can take out 2,500, get to me. If I hit the minimum threshold, they say I can take out 1,800, get to me. If I hit the minimum threshold and they say I can't take out nothing but 1,000, get to me. Give me my money. Got to get it. I'm short right now. TP at 460. Let's see what we talk about. MNQ. Let's look at this right here. MNQ M 2026. All right. Where'd you get in at? Where'd you get in at? Where'd you get in at? You say your TP was 460. 460? What the? You got in at 600 in your TP 460. What the? That boy, you going all the way against the grain. What time frame was your entry based off of? That boy, you going against the grain. 460 was the TP. Got in at 600. Got in at 600. What was your stop loss above that swing high? What's your stop loss above the swing high? Got in at, wait a minute, I'm seeing a lot of stuff there. Wait a minute. Is different people talking to me? Is different people putting stuff in? Nah, that's somebody else. That's a different name. It's like 100 different people put, man. I ain't looking over there. It's different people putting stuff in. I don't feel like looking at it now. I was talking to one person, and then all of a sudden I just start seeing stuff from other people. I just start seeing stuff from other people. But looking at this right here, right? Looking at this 15-minute chart right here, right? Right. For me, it ain't gave me no reason to try to short yet off this 15-minute chart right here. Right. So the 15-minute chart, it ain't gave me no reason to try to short back down to 400 or whatever it was. Whatever that person said. Right. Let me see what right there. Right. It ain't gave me nothing. It ain't gave me no reason to want to short back down here yet. Right. It ain't gave me no reason to want to short like that right there yet. Right. That's just for me. Okay. That's just for me. It ain't gave me no reason to want to short. Not saying it can't go, but for my trading style, it ain't showed me that yet, because we've come up here. Right. And right now we're just engineering liquidity on this time frame. On this time frame right now, all we doing is engineering liquidity right now. So the 15-minute ain't said I want to go up or down, right? We're just in the middle of the road engineering liquidity, and right now anything that I trade at this moment is just going to be a guess. It's going to be a speculation, right? It's going to be a speculation. And if I'm going to speculate anything, I'm going to speculate with the order flow. And right now we're in a premium, so I'm not going to be buying up here, right? I need the algorithm to show me that it's ready to go up past this and then come down and give me a reason to buy in a discount, right? Like here, we drop down below some short-term sell side. If it displaces up and then offers me an opportunity to buy in a discount inside of a range here, right? Then I'm gonna up here in this area of being in a premium, then I'll go along with the order flow to take a chance, because it's showing me I manipulated sell side, expanded up, and now I'm looking for a reason to buy and gonna be targeting one of those other targets that we talked about to the upside. But for right now, we've, you know what I'm saying, we at the top of a breaker, and we're just engineering liquidity on this time frame. So it ain't nothing about that say, okay, I want to short right now, right? I'm trying to pick the top right here. Not saying it can't work out for you, but right here you're just trying to pick the top because the algorithm hasn't displaced away, right, and giving you a reason to sell in a premium, right? We traded up above a high, right? We dropped down, right? But we only took out internal liquidity, right? We're not leaving this area. We're not leaving the what's the name? And if we look over here, right, this right here is our first SIBI that was created on the way down, right? So right now we've used it for its first use. We used it as a SIBI, took out the sell side. Now we're back above and we're seeing discount sensitivity at consequent encroachment. So we haven't invalidated this inversion fair value gap yet, right? So only thing we did was take out liquidity, come back down to the inversion fair value gap, taking out short-term sell side, right? So we haven't invalidated this inversion fair value gap yet. So again, there's no reason for me to try to sell right now outside of guessing, right? That's just for me. Now, if you saw something different, hey, stick with your strategy, because you know what I'm saying, it could pan out, right? We've taken a high, right? We're starting to act like we want to break down, right? But we're still respecting bullish order flow, right? So what, now that you're in the trade, what can you do to help you manage the trade? You got things you can do, right? So now you got a SIBI right here, right? You got a SIBI right here on this 15-minute time frame, right? You don't want to see no body closures above consequent encroachment of that SIBI, right? If you see body closures on this 15-minute time frame above consequent encroachment, you know, that's not a good look. Not saying it's over, but it's not a good look, right? So if you do see body closures above that consequent encroachment, right, you have a discount wick here, right? You want to see consequent encroachment. You don't want to see no body closures above consequent encroachment of that, right? Now on this, if we do see a body closure here, right, let's go and see how we're wicking above that consequent encroachment. Now you want to look at your lower time frame and say, okay, on my lower time frame, right, this right here, this BISI right there, right, that BISI right there, we came and then we cut right down through it, right? That's the first BISI that we made when we traded up there, right, into consequent encroachment of that wick, right? We cut straight through it and made an inversion fair value gap, right? So if we're trading up, let me turn this green so I don't get confused, right? Okay, so this is this is a 1 minute BISI, this is a 15-minute SIBI, right? If we wick up through here, okay, this fair value gap right here, right, this is the first one based off displacement outside of this area. So for the sale program, you want to see this give premium sensitivity, right? Which is doing now. You don't want to see no body closures above this on this 1 minute time frame consequent encroachment, right? It can wick up into this inversion fair value gap, and you definitely don't want to see no closures above consequent encroachment on this 1 minute time frame for that, right? If you start to see all of that, like a closure on the 15-minute time frame above consequent encroachment here, that's not good, because there's no other reason to come up there outside of high resistance, right? So high resistance, if it comes up into here, you're demanding that this holds price down, right? Because why? This right here, these are your trap traders up here, right? You got a balanced price range right there, right? Then we consolidate here left. So now all of this is a balanced price range, right? These PD arrays here, right? This SIBI, this BISI, this whole little balanced price range right there, these are your first. This is where you demand that price stays below that and comes back down, right? If you lose this on a 15-minute and start losing these right here, it ain't looking good for the home team, right? But again, not saying that it won't work out for you, but those are the PD arrays you want to be watching to manage your trade, right? And that's just a, just off a quick glance right there. All right, man. So it said chill, focus on me. Hopefully that helped you. Hopefully what I just said helped you. Because it was like so many different people putting numbers in there. But hopefully what I just said helped you, because it's around the same price action. All right, it's the same price action. All right. So I'm looking at the 1 minute right now. It keeps printing small bullish candles into right around here. Right. So right around this area right here. Right. So we getting ready to start a new 15-minute candle. Right. We getting ready to start a new 15-minute candle in 27 seconds. Right. So right now, this 15-minute candle is looking like it's about to close above consequent encroachment, but we got just 15 seconds left, right? So this is the first thing you're watching, right? This is the first thing you're watching. Do we close above consequent encroachment of this in the next 2 seconds, right? If we do, then you'd be like, okay, that's not extremely good, but it's not the end of the world, right? So now you got your wick of your bearish order block, because in high resistance, what do we expect? We expect price to come back up into the order block, right? So you got your wick of your bearish order block on the 15-minute time frame, right? So now, right, you see we came up into the lower quadrant of that wick, very close to it, right? And then now we're seeing some sensitivity. Now on this 15-minute candle here, you're looking to see, right, even though we closed above this, right, we got a 15-minute PD array up here. That's why I said this is not the end of the world, because we got a 15-minute PD array that we want to eyeball based off of high resistance, right? So now you want to demand that price stops at these 1 minute PD arrays that we was talking about and gets on up out of there, because based off the 1 minute time frame, right, all of this is a balanced price range, right? And you don't want price digging back up through that, right? You don't want price digging back up through that, even though on your 15-minute time frame, right, this is consequent encroachment of that wick, right? And you can't get all the way up here, take out this little bit of liquidity right there, and still be within the realms of what's allowable inside high resistance. This is where you want to demand to see that sensitivity. You want to see it, and all of this right here is like, this is what's the word? Efficient delivery. You got sell side delivery, buy side delivery. So with this sensitivity here, you want to see price moving through this. You don't want to see it stalling and stuttering because we got a whole bunch of efficient delivery in there. So if it's heavy, you want to see it get heavy. You know what I'm saying? So if it closes within the change of character, would I change bias or go long and go long back to alt? Nah, you don't want to just, it's like you want to invalidate your trade. You know what I'm saying? You want to invalidate your trade based off of whatever your strategy was, right? Just like for me, I said I ain't see nothing that told me to go short at this time based off what price was doing. But I was like, if you're already in, these are the PD arrays that you're demanding to see certain things to say, okay, I'm still on the right side of things, right? But if these PD arrays are not giving you that, then you be like, okay, yeah, I'm on the wrong side of this, right? I'm on the wrong side of this. Okay. And then back to, with the high resistance, right? We was talking about high resistance. This is just the wick of your order block, right? So this is consequent encroachment. You just don't want to see no 15-minute closures above this, right? So with high resistance, this right here, right? That's your first SIBI that was created off of displacement, right? And then you got this BISI up here, right? We do got a BISI that's inside here, but this is like the first one based off of like heavy displacement leaving these bodies right here. So you got an inversion fair value gap and a SIBI way up here, right? So on a 15-minute time frame that we just opened, we can very well wick all the way up into this, right, inside our wick that we're watching, but still come down and close respecting that right there inside high resistance. That's why I say you got your PD arrays that you're watching to say, hey, what story is it telling me right now, right? What story is it telling me right now? There, because the last thing you want to do is like cut bait on a trade that hasn't invalidated your idea based off price action, right? Because if you cut bait on it and it hasn't invalidated it based off price action and it go in your direction, then you're going to be pissed at yourself like, man, I just got out of that because I was scared. But let it, because you put the stop loss there for a reason, right? You saying I can afford to take a loss up to here if that's what your stop loss was. I can afford to take a loss up to there. So if you can afford to take a loss up to there, right, then allow price action to prove you wrong, right? And once it proves you wrong, based off, like if you come up here, you get the closure up there, then you go up there, and then you start seeing it respecting bullish order flow over here, right? For example, this bullish fair value gap right here, right? We never used it for its first case. We immediately traded down through it. Now on this 1 minute, now that we're back above it, right? Now, if it comes down and use it as a reclaimed fair value gap, right? And then we get that 15-minute closure above there, right? You can be like, oh man, we're starting to respect bullish order flow. We done disrespected that 15-minute PD array. We done disrespected that 15-minute PD array, right? So you and Michael said if you disrespect 3 PD arrays, then you're on the wrong side. Unfortunately, for this time frame on the 15-minute, all you got is 1 and then 2. All you got is 2 before it hits your stop. You don't have 3 to disrespect before it hits the stop at the high, right? But if you start disrespecting these PD arrays, then you can be like, okay, I see that we're respecting bullish order flow. I'm gonna go ahead and take it off here instead of taking that full stop, right? Right, taking it off here instead of taking that full stop, and then I'll look for a reason to re-enter, right? You don't want to just try to reverse it and take it the other way, right? You want to let the price action prove you wrong, and then once it proves you wrong based off the PD arrays, then be like, okay, all right, it shouldn't do that, and because it's going to start to show you PD arrays on the other side that it should support, right? It's going to start to show you PD arrays on the other side that it should support, right? Because now, like, we got above this SIBI here, and we got back above this BISI, right? So right now, that's your first SIBI dropping down, right? This is your first one based off displacement, right? The first one dropping down is in line with the first BISI, which is in line with this. Now, this here, right? We came back up. We didn't use it as a SIBI, and now we're back above it, right? So now we got an inversion fair value gap there, we got an inversion fair value gap there, and we got a reclaim fair value gap here, all right there in that green area, right? So if price comes back down on this 1 minute time frame, uses this area to push back above that high, be like, it's respecting bullish order flow, right? Even though you're still inside the range there, it's showing you, oh, we're respecting bullish order flow, right? And then if you get that 15-minute closure above here, right, after respecting bullish order flow, then you can be like, you know, but we still got 7 minutes left on this 15-minute candle, right? You're looking at where you close. Do you close above 27,615 and a half on this 15-minute candle right here? Do you close above there? Right now, you done disrespected that 15-minute PD array. Now you disrespecting the wick on this bearish order block, right? And then, I mean, you can coming up if you want to dig into the trenches, right? That's just on the wick of the order block, right? But if you go from wick to wick, mean threshold of that order block is right there at that upper octant, right? Mean threshold is at the upper octant, right? So a 15-minute closure above mean threshold of that bearish order block at 27,652, right? That's your last line of defense, right? That's your last line of defense. But you want to see the sensitivity in that, since it's such a long wick, this way you want to see the sensitivity. That's why I was just looking at that. I wasn't looking at mean threshold of the whole thing. With that long erroneous wick on that order block, that's where you want to see the sensitivity, right? So technically you do have a last line of defense there, right? So closing above that fair value gap, closing above consequent encroachment of that wick, closing above mean threshold of that, that's 3 PD arrays. He say 3 PD arrays, 9 times out of 10, you on the wrong side. Disrespecting 3 PD arrays, you're usually on the wrong side. All right. And then again, when you're looking at the 1 minute time frame now, right? Right. So we've come up here, right? We was coming down. We got a bullish breaking market structure here on the 1 minute time frame, right? These right here, these are your trap traders down there, right? You don't want to see, for the bullish stance, you don't want to see price coming back down here, okay? If you go from that high right there and then come over here, right, to that low right there, right, you got a discount of the entire range, and it lines up right there with that reclaimed fair value gap we was talking about, right? And if you come here to where we left that area, right? If we come there to where we left that area, the low of the candle when we left that area, you can see right here, we're flirting around equilibrium right now, right? We're starting to see discount sensitivity at equilibrium right now, right? So you will want to see this start getting heavy real fast, right? Or that's not a good sign for the bearishness, right? So for when we left this area, right, these are all the trap traders right there. We're showing sensitivity at equilibrium right now. We're starting to hover, okay? This right here is your inversion fair value gap, reclaimed fair value gap right there. And if we go to the bottom of our order block, right, discount, equilibrium is 26,611, right? So 26,006, we just touched that, right? If price firms up right here, then trades back above that high right there, it ain't looking good for the home team as far as shorts, right? Because you're respecting bullish order flow, right? And then you'll be focusing on, do we get a 15-minute closure above that 27,617.50, right? Which is, you got 3 minutes. You got 3 minutes left to see if you get a closure above there, right? 3 minutes left to see if you get a closure above that 27,617.50. What's an upper octant? The upper octant is just the highest octant before the high, right? This is the high of the wick right there at the body of the candle. This is the low of the wick at the low of the candle. And then these levels here, that range is broken up into eighths, right? And then an eighth is an octant, right? And if we break that range up into quarters, into fours, right? If we change now, this is the upper quadrant, right? That's your upper quadrant, your lower quadrant, your equilibrium, consequent encroachment, your high and your low, right? And then if we put it into eighths, right? That's your high, your upper octant, your upper quadrant. That's a quadrant in between there. Your consequent encroachment, that's an octant, right? That's your lower quadrant, and that's your lower octant, right? That's all it is, just the eighth, the highest eighth before the high. That's the upper octant. All right. How did this turn into a whole tape reading session? How did this turn into a whole tape reading session? Right here, we're over here fighting. Right, we're fighting here. We're dropping down into a discount. We're coming into the area that we're watching to see if we lose it or support price. Right, we just traded down to that lower octant of the wick. Right, so we just got a 1 minute closure below consequent encroachment of that BISI, right? Let's see if we trade back up and get immediate rebalance or go down, or do we trade back up, right, and start disrespecting these bearish volume imbalances and fair value gaps, right? Because we trade back up into this 742 candle and then start to move away, that will be an immediate rebalance, which is a good thing for the bearishness, right? And then all you got to do, remember, now we're here inside the wick of this bullish order block, right? If we disrespect consequent encroachment of the bullish order block, then we got to push through that fair value gap, right? And then we're back there at that 15-minute PD area again. And remember, we said this was the first one leaving that area, right? So there we go. Push down into that 15-minute. All right, so we come back up to the 15-minute time frame. We just opened a new 15-minute candle, right? New 15-minute candle. We did close respecting consequent encroachment, but now we're back above this inversion, right? We're above this inversion. We just traded down into the inversion fair value gap, and we're getting discount sensitivity at that consequent encroachment, right? Traded down, getting discount sensitivity at that consequent encroachment of that 15-minute fair value gap, right? So now, since we traded all the way up here, right, and came back down, right, we've already pushed above consequent encroachment of that wick. So now, right, now you're watching consequent encroachment of this wick, right? Do we get a 15-minute closure above there, right? And we're getting some extreme discount sensitivity off that inversion fair value gap right now. Some extreme. And we're getting ready to go into our macro time, right? So we're getting ready to go into our macro time at 750, right? So at 750, we anticipate price, you know what I'm saying, seeking out some untouched liquidity or some untouched imbalance, right? So, all right. So this is consequent encroachment of that wick over there. Like I said, we traded into consequent encroachment of that. So now, right, we'll be focused on consequent encroachment of that new wick that we created here. This is our premium PD array there, and we're already at, get out of here, right? We're already at consequent encroachment of that wick already, right? So we're seeing extreme discount sensitivity at this inversion fair value gap. We came, closed above it, right? Stayed above it that time, and then we traded back down into consequent encroachment of it, and right, we're seeing some sensitivity there, right? So we traded up into that octant above consequent encroachment thus far, right? We traded up into that octant that's above consequent encroachment thus far. Let's look at the lower time frame. Look at the 1 minute time frame. See what we're doing, right? So on our 1 minute time frame, we came down into our bullish order block, right? Sensitivity off of there. Okay, blast up. Respecting that fair value gap there. We're right there at consequent encroachment, right? We got a closure. No, that's the high of it right there. So a closure above here, right, will give us that inversion fair value gap right there, right? So a closure above that will give us that inversion fair value gap right there. If we close above there, right now we're flirting around consequent encroachment of that inversion of that SIBI right there, right? But watching this here, watching how this plays out, right? Extreme sensitivity there. Took out some short-term buy side right there, right? But price is still, right, showing that sensitivity, right? Remember we said this was the first one leaving that range, right? So we totally respected that, and we're, right, respecting that area we were saying we're looking to see if data support price, right? But still not out of the woods yet. Getting ready to go into the 750 macro time, right? We're still hanging out there at equilibrium, right? Of our, remember this was our latest expansion leg right here, from our order block there to that high. That was our latest expansion leg. Okay, that's the equilibrium of that range. We're hanging out right there in the middle of the road, dilly dallying. Macro time coming up. Then we're going into 8 o'clock. 8 o'clock is the official open, right? All right, so it's 7:50, right? 7:50. Going into our macro window. Okay. Over here to 8:10. Right, so 7:50 to 8:10. That's our macro window. That right there, this right, remember that was that wick on the 15-minute time frame. That's what those lines are. That was that wick on the 15-minute time frame. I got a lot going on, so I'm just gonna hide some of this stuff because there's too much going on right now. We already seen how we've been using these PD arrays there. All right, so 1050. We got to pop up, right? We got to pop up into the short-term buy side, right? Watching to see, does price want to spool toward the buy side or toward sell side right now, all right? We're still respecting bullish order flow, right? We're closing back above consequent encroachment of the down close candles, right? Here, we made a down close candle here. Right, and we come back up. We closed above consequent encroachment of the down closed candle. Right, we're still hovering around that equilibrium. All right, popped up above a short-term buy side there. but we're still hovering around that equilibrium. Not a whole lot of spooling going on right now. We still right here hovering around the middle of the road, right? So we've dropped down into a discount, starting to stretch out a little bit, starting to spool a little bit, right? Does it have enough strength to spool into the sell side? All right, just came below the body. Fair value gap. All right, bullish fair value gap right there for the 1 minute. All right, we came down, marking it out because we came down here. We never used that. We went straight through it, down into the order block, down into the inversion fair value gap. So now watching this, because this is the lowest BISI in this leg, right? And we came down below that body and into that BISI right there, right? So we're spooling, right? That's an imbalance, right? And we're looking to see if we got enough spooling in it or desire to get to the sell side, or do we come to the imbalance and then start to attack buy side, right? We're getting discount sensitivity at the imbalance, right? Watching this volume imbalance, right? Looking to see if it stays heavy and wants to come to the sell side. Watching your volume imbalance. Remember, the volume imbalance can get traded to multiple times, right? The volume imbalance is like one of the weaker PDRAs. It can get traded to multiple times, right? We hit our volume imbalance, come back down, all right? Starting to spool toward the sell side. Got close to it, very close, right? Okay, took the sell side. Now that we took the sell side during this macro time, now you want to see, does price stay heavy and want to continue down, right? Or is it just taking the sell side, right, at the start of the macro to take out short-term sell side, then push us back up, right? So we come to our higher time frame again, right? This was our SIBI there, right? That's our SIBI there. We have this premium wick down here. All right, if we go back to our SIBI, nope. All right, that's our SIBI there. That's the 15-minute SIBI right there. We got 5 minutes left on this candle, right? Watching to see where we close at there, right? We got a discount wick right here. All right, so we're watching where do we close in relations to the, okay, little quick little jab on us. Got a quick little jab there. All right, quick little jab on us. Quick little jab on us. 15-minute BISI over there. Right. And looking at this whole consolidation area. This is the very first BISI created in this entire area right there, right? So you want to see how price reacts at this BISI. This is the first BISI of this entire consolidation area, right? So you want to see how does price react at that BISI, right? Because if you look in here, all this consolidation, that's the first BISI of this entire consolidation, right? So if price gets down to it, you want to see how price reacts there. For the bearish narrative, you want it to come below here on a 15-minute basis and use it as resistance if you want price to keep coming down, right? Got 3 minutes left. 3 minutes left on this candle right here, right? We're watching how do we close. Let me make this fatter on there so we can see that line good. how do we close right there in relations to, that's the midpoint of that, right? Where do we close in relations to that on the 15-minute time frame? All right, because we've dropped down into our discount, right, imbalance. This is our discount imbalance right there. Came all the way down just below the lower quadrant of this wick right here, right? That's the lower quadrant. If I put it in quads, you can see that that's the lower quadrant. We came just below the lower quadrant of that wick right there. All right, we got 2 minutes left looking at how do we close in relations to this inversion fair value gap, right? And this discount, this premium wick right here, right? Do we close above the wick? Is 27,592 and a half. Then the consequent encroachment of this fair value gap right there is 27,601 and a half. Right. Shorting again, got in at, these jabs are crazy. You trade, are you trading momentum, or are you trading the concepts? Cause you say I'm shorting again, you just trading off momentum. Cause if you just trading off momentum, what I'm talking about don't mean a hill of beans to you. You just trading off momentum. Cause you trading off momentum, what I'm talking about, it don't make no difference. Cause momentum, you just looking to ride the momentum down. Right? You just looking to ride the momentum down. And I'm just wasting everybody's time. Right? You looking to ride the momentum down. You ain't looking to, you know what I'm saying, trade like the PD arrays and stuff. You just looking for, okay, you just trying to pass eval. Oh man. You trying to pass the eval. You just scalp. You just ride momentum, just scalping, trying to pass the eval real quick. So you just out here gambling right now. Ain't nothing wrong with you. I ain't mad at you. You know what I'm saying? When I'm in an eval, I be DJing, doing all kind of DJing stuff when I'm in an eval. But like right now, I'm just, we talking through how to, you know what I'm saying, study what the PD arrays telling you. Like, is it respecting this? Is it respecting that? But if you just trade in momentum, right, you just get in, you know what I'm saying, get you a few points, get on back out. Get in, get you a few points, get on back out. Hey man, I appreciate y'all for hanging out with me. I done got tired now. It's 8 o'clock. Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. Gang. Tomorrow, we got pre-market analysis. Tomorrow, Friday. Don't force it Friday. Don't force it Friday. Y'all give it up for yourself, man, for sticking around this long. Give it up for sticking around this long. Gang, I'll see y'all at 9 in the morning for the pre-market analysis. Hopefully my son don't be dragged. He'll dragging his feet today, so we end up starting a little late. That's y'all done got 2 impromptu tape reading sessions today. One was at 9 o'clock open. Got a little impromptu tape reading session. And then tonight, Pure Motivation done talked us up into an impromptu tape reading session, studying the candles, right? Studying, you know what I'm saying, what is it saying based off of this PD array, that PD array, premium discount. You know what I'm saying? It's going back here, it's respecting this, respecting that, right? That's all it is. Is you sit down and you look at the candles, right? And you say, okay, since it's made this PD array, this is important about this PD array, right? Nah, you good. You good. You ain't got to say my bad, because I ain't got nothing to do. You know what I'm saying? I ain't got nothing to do right now, right? My oldest son at work. My wife took my youngest son to the school for a concert. He got to attend a concert for Triumph Points. She went to the gym, right? Ain't nobody here right now. I'm just chilling, right? I usually don't trade the Asian session, right? Look at price. I just got stopped out at break even. Oh, it went back. Oh, it went back up a little bit. Yeah, it went back up a little bit. It popped back up a little bit. We still inside. We still inside that consolidation. We're still in that same range, right? We're still inside that same range. When we looked there, right? Remember we said this right, all of this right here is the same consolidation range, right? On this 15-minute time frame, price has not said I'm going down or I'm going up. We're still in that same range from the beginning when we first started talking about it, right? Only thing we did, like we said earlier, was drop down, take out that short-term sell side, and then we just been chopping in that same range. Look where we at. We're like pretty much right in the middle of that range. That's what we keep coming back and forth to, right? Okay. Right. Look at that. From the lowest low to the highest high of that range, right? Where we at? Right there. Back and forth, back and forth. Right there. Engineering liquidity. That's all we doing. Right? We still inside that range. All right. It was great information. Thanks for the question, man. Y'all give it up for pure motivation, man. Y'all give it up for pure motivation, pulling up with the hard hitting question about taking shorts, and we started looking at the price, man. We said, hey man, let's look at it. These the PD arrays you want to monitor, right? He said, hey, I'm just scalping, and so you scalp inside the range. You know what I'm saying? When you scalp inside the range, just scalp inside the range. If you doing momentum, right, take your few points, get off. You know what I'm saying? Names being definitely gonna tune in. It's Tim. Oh, tomorrow's tune in is Tim. Wait, def gonna tune is Tim Unk. See then. Oh, tune in tomorrow. Okay. Yeah, tune in tomorrow. Appreciate it. Pull back up tomorrow, man. That 5 minute on up there should bring us back down. That 5 minute what? You say that 5 minute on up there should bring us back down. What on the 5 minute should bring us back down? Money boy DMB. You say that 5 minute on up there should bring us back down. Oh, 5 minute order block. 5 minute order, the bearish order block. Let me go on the 5 minute. 5 minute. You talking about this order block over here on the 5? This one on the 5 minute right here. That order block. What time is the order block? Now one I'm pointing at is 6:05. Which order block you looking at? What's the time of the candle? 5 minute order block should bring us back. What's the time on the candle? This order block right here. I'm looking at the 6:05 order block. What you looking at? Give me the time stamp of the candle, the 5 minute candle. That's how okay, yeah, that one. Okay. All right, so that 5 minute order block right there. Looking at that 5 minute order block, right? That's mean threshold of the order block, right? So bearishness, right? You don't want to see no 5 minute closures above this right here, right? For bearishness, you don't want to see no 5 minute closures above that, right? We got a SIBI right there, right? That SIBI is up here in the premium of our range, right? So that right there is let's check it out here. Boop, boop, right? So this imbalance right here, it's in a slight premium right there at equilibrium, right? Your extreme premium imbalance is up here, right there at mean threshold of the order block, right? So if price came all the way back up to that SIBI inside your order block right there, you want to see premium sensitivity at that SIBI, and you definitely don't want to see any 5 minute closures above mean threshold of that for the bearish narrative, right? Right now, we've swept that short-term sell side, right? And we're respecting bullish order flow. On this 5-minute time frame, as you see, we came here, swept the short-term sell side, touched that. I can't remember what that PD array was. We marked it out for some reason on the higher time frame, right? Got discount sensitivity there. We came back up here, right? Poked above that short-term high right there, came back down into our propulsion block, right? Remember we said that was our propulsion block. This right here was our order block. We came down into our propulsion block and we traded right back up, closing back above mean threshold of the down close candles. In a buy program, right, price is going to respect down close candles, meaning closing back above mean threshold of the candles, right? So we created 2 down close candles, closed back above mean threshold, right? Created a down close candle, closed back above mean threshold. Created 2 down close candles, closed back above mean threshold, right? We're still respecting bullish order flow right now, right? We came up, we closed above a bearish PD array, which is expected because it's in a discount of the move. That's expected, right? But then when we get to this one here, that's in a slight premium and we close above it, that's a little bit more telling of bullishness. This is our change in the state delivery right there, right? So we got a change in the state delivery, right? We've disrespected a premium PD array and we're still respecting bullish order flow as far as closing above the down close candles, right? But we're still not at our last line of defense, right? This is our last line of defense right there, a 5-minute closure above mean threshold of that. But right now, price, ever since over here, price has been respecting bullish order flow, right? Ever since here, when we came in and talked about it, ain't gave me no reason to go long or short yet, right? It's been respecting bullish order flow, right, the whole time, right? Even though we're consolidating here, it's still been respecting bullish order flow the whole time, right? So just keep that in mind. And you can just scalp inside the range, right? You can scalp inside the range, go from premium to discount, premium to discount, premium to discount, right? Right now, this is the range that we're in right now. That's the highest high, lowest low. This is your current dealing range that you're in right now, right? With this high resistance, right? You can take advantage, high to low, high to low, high to low. And then we're getting ready to end our macro time, right? The macro time is getting ready to be over. So we can look and see what did we do during the macro time, right? So we come over here to 750, right there. Come over here to 810. All right. So for the macro time, on the 5-minute time frame, all we did was move back down into this imbalance, right? And thus far, we have not taken out any buy side, right? Right there would be some buy side that we can take out. We drop down into an imbalance, right? Trading back up, right? Look like we may want to take out buy side. Now, watching this candle right here. So we traded down into that candle there, right? If price starts to move above this high, then this candle here is acting as an immediate rebalance, right? Because we closed with the opportunity to make a BISI that big. This candle immediately traded back into that 755 candle price range, right? So now if this next candle here starts to move outside of this range at the latest one candle over there, then this will be an immediate rebalance. And that's a very strong signature, be it bullish or bearish, to, you know what I'm saying, say we're getting ready to go. But if we don't leave this area right now, right, we're still hovering around that middle, right? All we're doing is just consolidating. Where does price consolidate? At equilibrium or fair value. We're right there at equilibrium, and we've been just dancing there, right? We've just been dancing there. Yeah, I got a Discord, but you ain't got to sign up for it. All you gotta do is just pull up here at 6 o'clock. Right? All you gotta do is pull up here at 6 o'clock and run your mouth. I do got a Discord, the link in the description. All right. inside the Discord, we do price action, pre-market analysis on Monday, Wednesday, and Friday. On Wednesday, we do tape reading. After pre-market analysis, we do tape reading up until like 10:15. We got Q&A on the first Sunday at 7 p.m. I haven't been doing pop-ups lately because I've been mad busy. I've been doing a lot of stuff. So I haven't been doing a lot of pop-ups, but you know what I'm saying, when I do pop-ups, I just pop up and talk about price. Haven't been doing a lot because I've been real busy. And I think that's it. Yeah, just tap in. Just tap in. Yeah. Just tap in. Like I say, man, I do got a Discord, right? But I don't be like promoting it like super heavy, because it's like my Discord is a real tight knit group, right? And I don't be wanting just anybody in there. You know what I'm saying? People who don't really understand what we about. I'm old. I'm an old man. I don't be having time for a whole bunch of little Thundercats that be in there with the foolishness. You know what I'm saying? I'm old and I'm petty. You know what I'm saying? I'm willing to help anybody, but my patience are like, man, I ain't got no patience for real. Ask anybody in the gang. My patience so short. I don't see how they put up with me. For real. I don't see how the gang put up with me. My patience are so short. Hey, man. I done started getting hungry, so I'm going to call it here. Shout out to everybody who pulled up. Y'all give it up for everybody who pulled up with the hard-hitting questions to get me to start running my mouth. Y'all know I love talking about this price action, man. I ain't got no life for real. I love talking about this price action. One reason I love talking about it is because, man, this stuff can change your life. If you discipline and got a strategy that you can stick to, if you discipline, got a good strategy, and don't get emotional, stick to your risk management, this stuff can change your life, man. It is life changing. You feel me? Hey, man, till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy B. Rogers Sr., a.k.a. Aranya Grande. That should be a big spot if you don't hablo español. Y'all be safe out these trade streets, man. I'm gone.